Good morning. You're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Let's see what the Asian and global markets did. US markets ended flat in trade. There was a sign of green as far as the European markets are concerned, and mixed cues coming in as far as most of the Asian markets are concerned. The SGX Nifty right now is indicating a negative outlook. It's down 7 points. But remember, we were up 41 points in trade yesterday when the markets were closed and the SGX Nifty was not. So expect a close to a 35-point gap up opening when we open in trade. No doubt it's come off the highs of the day. Now ADRs, how did the ADRs pan out in trade? Mixed day of trades. Vedanta was up, Dr. Reddy's was up. Weakness was seen in Tata Motors. The other cues were rather weak in trade. The Nifty also ended up just 19 points on Tuesday. There was outperformance that was seen on the mid cap and the small cap end of the market. The banking indices didn't do well. The Nifty Bank was down. The Nifty PSU Bank was down in trade. So there was weakness that was seen as far as some of these indices was concerned. What did well was the infrastructure as well as energy index in trade on Tuesday. The metal index continues to bleed. It was down almost 0.3% in trade. Now, how did the indices pan out this week? So infra, metal and PSU banks have done well. IT, despite the rupee at almost 70, didn't do well. It's down almost close to 1% this week. Now, fund flows, FIs were net buyers to the tune of 250 crores. DIs bought in almost 200 crores in the cash market. Initially, if you're looking at the Nifty was up almost 19 points. Reliance, Axis Bank, Tech Mahindra contributed on the positive side. HUL, Kotak and Tata Steel were the counters which contributed on the negative side for the Nifty. On the futures side, there was fresh buying that was seen on the Nifty. Open interest build-up was 0.5%. On the long side, long unwinding was seen on the Nifty Bank. Open interest was down 4%. The Bank Nifty ended flat in trade, but with a slight negative bias. Where are positions being taken? There is very strong support coming in at the 10,500 mark in trade. The SGX Nifty is indicating that we will open about the 10,600 mark in trade, which will mean that this green line will go down and this red line again will come up, which will mean that the call writers will have to shed positions because premiums are going down and put writers will become much more aggressive. And that's exactly what you see what happened on Tuesday. The 10,500, 10,600 and even at 10,700 put writers are writing, which means that the bulls are writing in this, they're active in this market, and there are positions that are being shed at lower levels because premiums are going up and call writers are losing tremendous amount of money. Now, as far as the stocks in the F&O ban are concerned, Jain Irrigation and Raymond are the counters which are in the F&O ban. What comes out of the F&O ban is Adani Power, which was up almost 3.5% in trade. Now, as far as the PCR is concerned, the Nifty PCR was flat in trade. The Nifty Bank PCR came off from 1.41 to 1.30. Couple of stocks I want to point out. First of all, it's NIT Tech trading at record highs on a high open interest build-up. It was 18% on the long side. You had Cummins, which saw fresh shorts, which saw short covering. Open interest was down 13% and the counter managed to move up 6%. And finally, Mahanagar Gas saw fresh shorts, open interest build-up of 10%. Reports indicate of a potential block deal that could happen today, which probably could actually put in more pressure on the counter going ahead. But these are the domestic cues that we need to watch out for. For all the top international headlines, let's go across to Rosalind Chin.
Russia is attacking US sanctions as senseless and unproductive. President Putin and recent Helsinki talks were helpful, but continuing action against Moscow isn't helping restore strained relations. The Trump administration added new sanctions on Tuesday, blacklisting 2 companies and 2 individuals suspected of trying to circumvent earlier measures.
Sanctions are counterproductive and senseless, especially in regard of a country such as Russia. We hope our American partners will realize the uselessness of this kind of politics and start constructive cooperation.
A new survey says a majority of the British public now thinks the country will crash out of the European Union next year without a deal. The KPMG report says 54% of respondents think the chances of the UK reaching some kind of accord is unlikely, with many people planning to cut their living costs. The survey found that if there's no deal, 70% think prices would rise, and a similar number say they reduce spending. Facebook says 4 million people may have had their personal information misused amid the fallout from the Cambridge Analytica scandal. The news comes as the social network attempts to tighten security around user details and be more open in its communications. Facebook also says it's now removed 400 apps it says are fake or attempting to influence public opinion. Apple and Google are facing a growing revolt over taxes at their app stores. A number of companies say they're charging too much to connect consumers to products. Netflix, Epic Games and Valve are among those that have complained and are trying to bypass the system. Grumbling about costs isn't new, but the rising dissatisfaction threatens to undermine what's become a digital goldmine for Apple and Google. Global news 24 hours a day on air and at TikTok on Twitter. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Rosalind Chin. This is Bloomberg.
Strong evidence, I think it's conclusive, but let's at least agree that it's strong, that Donald Trump knew that Michael Cohen was going to be advancing money on his behalf to hush up the relationships with these two women, and that it had a political purpose to it.
Michael Cohen's attorney Lanny Davis speaking to Bloomberg in D.C. Donald Trump contradicting his former fixer, denying using campaign funds as hush money, also telling Fox News that he only learned of the payments, quote, later on. Let's bring in senior international editor Jody Schneider. Where does this saga go now?
Yeah, interesting, isn't it? Just a day after Michael Cohen, in his plea agreement, said that that he paid the hush money in coordination with
a federal
candidate, right, that he, in coordination with and at the direction of this candidate, which clearly he was referring to President Trump, who was candidate Trump at the time in the 2016 election. Now we have the president himself saying he didn't know about the hush money, he didn't know about the payment, and he only learned about it later on. There's also a tape that has come out that shows that that appears to show that he knew of at least one of the payments. So there's lots of
he says one or two things on that tape, though, actually, doesn't he?
Yes, and so it's very interesting. The day started with the president having some tweets about Michael Cohen, which appeared to be sort of shrugging it off, saying, well, you know, if you need a good lawyer, don't go to Michael Cohen, that kind of thing. But then got more serious as he
just said that. He said that he was his lawyer for 10 years, who worked with Cohen for 10 years, and said he's not a very good lawyer, which begs the question, what was he doing with him for 10 years?
There's that. Those are among the questions. Where this goes now is interesting because Mr. Cohen says he is happy to cooperate. His lawyer, Lanny Davis, we just saw on that tape, said he is happy to cooperate with federal prosecutors in the Mueller investigation. Mr. Cohen was not charged through that investigation. So now it'll be interesting to see if he does and what he tells them and where this goes from here.
Absolutely. And we've also, of course, him mentioning some things about Russia here, too, which came out of the blue a little bit from Michael Cohen. Now, what are the implications here when we look politically at the election cycle, the midterms coming up in particular?
Yeah, so right now, there's almost zero chance that you would see impeachment articles brought in the House of Representatives because it's a Republican-controlled Congress. We haven't even heard much from the Republicans at all since these Manafort and Cohen pleas, plea in one case and jury conviction in the other. But that's where the November midterms become so important, because if the Democrats were to take the House of Representatives, which looks increasingly possible, they could well file to start the impeachment process, and it does start in the House. So that's what we'll be looking for. Democrats are not making that case in their campaigns. The talk about impeachment, pro-impeachment talk, is coming from party activists outside Capitol Hill. But we are starting to hear more of that in recent days.
Well, stock of the day today is Prataap Snacks on back of the acquisition that the company is planning to make or has made for a sum of around 148 crore. It's going to be acquiring 80% stake in Ahmed Snacks, which is a Gujarat-based snack company, for a consideration of 148 crore. And with this, it's going to deepen the presence in the Gujarat market. Let's see how the 80% breakup has been panned out by the company. You would have 77% of stake coming through. The company would be acquiring the 76.9% stake from existing shareholders, while the remaining 3.1% stake will be coming in through the investments in company's share capital. A share purchase agreement has been signed with effect to this, and also with this, the company will hold an indirect control in the indirect subsidiary of the company. Talking about Prataap Snacks, now the one of the top 6 India snack food company that we are talking about, the manufacturing facilities are across Madhya Pradesh and Assam, arm, and the company has recently raised around 420 odd crore via an IPO, which received an overwhelming response. Talking about Awadh Snacks, which has a strong presence in Gujarat and is looking to expand into Maharashtra and Rajasthan. Let's talk about the shareholding pattern of Prataap Snacks, just to understand where does the promoter shareholding stands. It's at more than 70% stake there, and a public shareholding stands around that 29% level. Let's look at the balance sheet position for Prataap Snacks at this point of time. Cash and bank balance summed to around 214 odd crore, whereas the total borrowing, and you have if you look at the Awadh Snacks financial position, where the turnover, just to understand how accretive does this deal or how attractive does this deal look at this point of time, you would see March 2016 the turnover around 27 odd crore. In 2017 that went up to 97 odd crore, and in March 2018 it stands at a good 139 crore. So the company is in short paying a 148 crore for a turnover of 139 crore. And do bear in mind also the fact that these financials don't reflect the financials of the indirect subsidiary.
Shifting focus to currency markets, the Indian rupee on Tuesday erased all its early gains and ended eventually flat at 69.83 levels against the dollar. The rupee was largely weighed by strong dollar demand by importers amid weak local equity markets. Well, on the contrary, bond markets did well on Tuesday as yields fell for the second straight session, and it stood around 7.83%. On the global front, dollar index now trades 0.4% higher, well above the 95.40 mark, thereby snapping its 6-day losing streak. That apart, the Federal Reserve's latest monetary meeting minutes showed that the central bank is ready to raise interest rates again if the economy remains on track. Also, traders remain cautious ahead of the anticipated US-China trade talks, which is scheduled for this week. Well, speaking of euro, it trades lower versus the dollar after rising for almost 6 consecutive sessions, and pound trades 0.2% lower versus the dollar now. And lastly, speaking of dollar rupee, now it is trading at 69.96 levels against the dollar in the non-deliverable forward markets, which indicates a weak opening for Indian rupee in today's trade.
Amongst the stocks to track is PNG on the back of earnings that were reported yesterday. Weak set of numbers, revenue growth of 4%, but EBITDA fell by a sharp 36% on account of higher employee costs, higher other expenses and higher advertisement expenses. So that took the EBITDA margin down from 26% to just 16%, and that also dragged the net profit lower by 43%. So expect a negative reaction here. Motilal Oswal is the other one. Total income grew by 8%, but net profit fell by 18%. So a weak set of numbers coming in. HDFC AMC, which recently got listed, however, reported a good set of numbers. Revenue growth of nearly 21%, net profit growth of 24%, and the mutual fund AUM grew by 22%. That apart, there's also a Times of India report. Prataap Snacks has already been spoken about, Maniki. So I'm going to move on to the next one where Mahanagar Gas will be in focus. There's a Times of India report which says that Shell Arm will offload 14% stake via various block deals today. So that could weigh on the stock. Watch out for that name. You also have Lakshmi Vilas Bank, which will be in focus. This is a ET report which says that the bank is in talks to sell up to 51% or controlling stake in the bank is in talks with strategic investors. So watch out for that name, as also Max India. Now, a Business Standard report says that KKR has emerged as a front runner to buy 47.5% stake in Max Healthcare. Max India is the holding company, so that's the one that you need to watch out for. Next on the list is ITI, which could react positively on the back of an order win of 2658 crores. This is a part of a consortium that has won the order. We don't know how much is attributable to ITI, but a positive reaction is likely for this one. And finally, you have HDFC, which has acquired 25% stake in Good Host Spaces for 70 crores. Now, this is a company which manages and operates student housing facilities. So let's see how this one reacts. But those are some of the names you need to watch.
If we look at the rally, it really peaked out as long ago as the end of January, and the MSCI EM index is down around 20% from the peak. So it's on the cusp of entering a bear market. And our new target price indicates, if we're correct, that it'll fall another 8% by June of next year. So that would make a peak to trough move of almost 30%. Now, we saw something larger than that as recently as 2015-16, and we saw something again around about 35% decline in 2011. So if you look at what caused those prior bear markets, we think we see something really quite similar today. So we see a significant slowdown in the global economy outside of the US, particularly in China and in North Asia. We see a decline in commodity prices, most notably copper, which always correlates well with EM on the downside. We are coming off very high valuations. So at the end of January, we were trading almost 14 times forward PE for EM, which is the 95th percentile of the long run range. So we have negative macro catalysts, a market that was quite overvalued. If we're right, earnings estimates are going to need to come down. They've already started to fall, but they have materially further to fall. And though this has been a bear trend since the end of January, it's only around 7 months old, and that's a little short to think that this is going to come to an end anytime soon.
Since you were talking about valuations for the Asia emerging market basket, for that matter, if you look at the 12-month forward price to earnings, India seems to be the most expensive and stretched out at this point in time, but that doesn't seem to be stopping the kind of rally that we've been seeing in the markets. Do you see that as a problem?
Well, we're overweight India, whereas, for example, we're underweight a market like Korea that's underperformed India substantially. I think the key point about India is that it's a very different stage of the business cycle from particularly the markets in North Asia. So India had an extremely weak economic environment really through the demonetization and GST reforms and then the fiscal tightening that was being done. Now you're getting a cyclical pickup. And that's allowing the market's earnings profile, I guess, to move forward. And whereas earnings expectations are coming down in other markets, particularly the more trade and global economic sensitive markets and sectors like autos and tech hardware across Asia, we're not seeing that in India. So we are actually able to recommend to clients consumer discretionary and capital goods stocks in India, which we're not recommending in the broader region. India is also not that exposed to global trade. It's somewhat exposed to oil and somewhat exposed to some of the developments that are going on in relation to sovereign risk elsewhere in the asset class. So we have had a couple of rate hikes in India. But our overall judgment is that India is a sufficiently strong macro and micro story now to justify an overweight. And as you say, it has outperformed.
If we are able to complete a motion, that changes the number. But in general terms, our comfort zone in other hubs has been $5 to $10 billion as our target sort of space at which we feel we have a critical mass in the country.
$5 to $10 billion, that's a lot. How much have you committed already across the two assets that you won?
Not so much. Remember, Amtech has other associated or subsidiary or affiliated businesses like Castex and ARGL and Metalist, which are in the fray. So that bucket so far is just over $1 billion. And of course, Adhonik was not a big amount.
How important is Bhushan Power and Steel to you? Are you still, what is your understanding? Are you still in the running? Because media reports suggest that there have been other bidders who have bid higher.
So time will tell. This process has taken many twists and turns. Obviously we are still in the process. We are keen for sure. Obviously we've demonstrated that already. But time will tell. With or without that, we are committed to our India strategy.
Well, Bangalore-based microfinance company CreditAccess Grameen will make its debut on the stock exchanges today. The issue price has been fixed at the upper price band of 422 per share. Now, the total offer was for 1131 crores, out of which 501 crores was offered for sale by a promoter, CreditAccess Asia, and 630 crores was a fresh issue, which will be used to augment the microfinance company's capital. Now, if you look at the overall issue, it just managed to sail through. It received a muted sort of a response. The total subscription was 2.22 times. That was largely led by institutional buyers because the HNI and retail portion or categories remained undersubscribed. So because of the tepid response, market participants expect a muted listing. They see the company listing at about its issue price, or small premium of about 2 to 8 rupees per share to the issue price. So the company is likely to list between 425 to 430 per share. So let's see how the valuations will look post listing. Now, at the issue price of 422, the implied market cap was 6050 crores, and the post issue price to book multiple comes to 2.9 times. Now, if it lists below its issue price at 412, then the price to book will work out to 2.8 times. And if it lists at a premium at 432, then the price to book will work out to nearly 3 times, which clearly makes it expensive. And you will see that when you compare it to its peers, Bharat Financial trades at 5.1 times its price to book, but that's on account of the higher return ratios. And though it's a microfinance player, direct comparison with CreditAccess is not completely correct, because Bharat Financial largely tracks IndusInd Bank price. Saturn Credit Care, which is a pure microfinance company, again trades at 1.7 times, and hence the 2.9 times multiple for CreditAccess does seem expensive, and that was also the reason why analysts were largely divided on the IPO. But a quick recap of the company's business. Karnataka and Maharashtra together contribute as much as 86% of the company's AUM, exposing it to a high geographical risk. But in terms of financials, it has seen a strong growth. Now, over the FY 14 to 18 period, AUMs have grown at 57% and the net profit has grown by 65%. However, along with this growth, the gross NPA ratio has also moved up from just 0.01% in FY 14 to nearly 2% in FY 18. So finally, if you look at the return ratios, ROE is at 11.8%, which is considered suboptimal, and this has in fact fallen by nearly 500 basis points over the last 4 years. Based on this, brokerages like Antique and MK had recommended avoiding the IPO because of the suboptimal ROE. SMC Global said that one can subscribe given that the suboptimal ROEs are already priced in, while Prabhudas Leeladhar said that they're not looking at listing gains, but you could subscribe for the long term. So overall, a muted listing expected for this one.
Lots of developing stories to watch out for over the course of the day. There are the trade talks between the US and China in Washington, and also updates with regard to Saudi Aramco and the IPO therein. We're receiving updates from Bloomberg on that story as we speak. But for now, there are several stories on the website that you can read. First up, Australian Prime Minister Malcolm Turnbull's troubles seem to be far from over. 3 of his cabinet ministers have resigned and pledged support for right-wing populist Peter Dutton, who failed to dislodge Turnbull from his post earlier this week. Dutton has now asked Turnbull to call for another leadership vote. And a fire broke out on one of the floors of 17-story Crystal Towers in Mumbai's Parel area, resulting in the death of 4 people. 21 others sustained injuries. The blaze that erupted on the 12th floor of the building was brought under control after 3 hours. Civic officials say that the building did not have the mandatory occupation certificate. That's all you need to know going into trade today. Like I said, it's going to be a busy day. So for all the updates going into trade this morning, stay tuned for Indian Open. This is Bloomberg Quint.